Aviation Magazine News Podcast. I'm Matt Driscoll reporting from Singapore. Well, we're counting down the days to the Singapore Air Show, one of the industry's biggest events of the year in Asia. We here at Asian Aviation will be there, and we hope you will be too. Come by our booth or look us up at the Media Center and look for updates on the Air Show on our website, our Twitter feed, and on Facebook. In today's podcast, we'll have the third quarter conference call from Tigerair and comments from CEO Lee Lik-sin, who reported the company turned in a whopping $6.8 million US dollars in net profit for the quarter that ended in December, and that's compared to $2.2 million for the same quarter a year ago. Following that, we've got a very informative, if a bit long, interview with Andrew Herdman. He's the Director General of the Association of Asia Pacific Airlines. Herdman will be speaking about the outlook for airlines in Asia in 2016, how hard it is to turn revenue into profits, why cargo traffic is flatlining, and how some countries need to invest in hardware like better airports and software like better air traffic management systems. We'll have those interviews in just a minute. Welcome back to Asian Aviation Magazine. I'm Matt Driscoll in Singapore. Tigerair reported its most recent results this past week. For the company's fiscal third quarter ended in December, it earned a net profit of $6.8 million US dollars compared to the $2.2 million it earned in the same quarter a year ago. CEO Lee Lik-sin talks about the company's fuel hedging strategies, a slight decline in yields and his outlook on yields, as well as the Singapore Air offer to take over Tigerair and potential partners the airline is looking at doing business with. As with most CEOs in Asia, Lik-sin is, well, he's a bit of a well of an information and not a fountain of information. This just means he kind of gives the bare minimum of information to comply with disclosure requirements and not much else, but it's still interesting to listen to. Here's Mr. Lee's take on the outlook for the airline.
The outlook, I think that the outlook is somewhat difficult. There seems to be great uncertainty over the economy, and this will exert downward pressure on yields. Nevertheless, the low fuel price environment offers us some respite, and we will continue to work hard to optimize our load and yields. We continue to deepen our collaboration with Scoot and the rest of the Singapore Airlines Group for future sustainable growth.
And Mr. Lee goes on to talk about the decline in yields, although he might not be as specific as many of the aviation analysts would like.
Well, in general, any time weakness of yield always reflects the market conditions. So it would be correct to say that the demand for this quarter, we failed to register the kind of improvements that we have been doing over the last few quarters. It's across the network. It's not specific to any one route.
I see. So generally across the board, you saw about a 1% decline in yield on all.
The number is the 1.4%, which is posted on slide 3. Then, of course, that's an average number.
Yeah. Are there any routes that did better than the others, and any specific routes that you can mention to us?
We don't go into route-specific information, as you would know.
And finally, Mr. Lee discusses potential partnerships that the company is working on. It's all a bit cryptic. It sounds like the airline is working very hard on deals and that there are some in the works, but as he says, nothing that they can publicly announce. He was also silent on Singapore Air's offer to take the airline private, said that they would not be commenting at this time on any details about the offer.
We are open, obviously, to further partnerships with carriers outside of the SIA group. Every now and then, we will have some discussions. At this point, we haven't finalized any commercial deals which we can announce.
So that's it for Tigerair. Coming up next is Asian Aviation Magazine's interview with Mr. Andrew Herdman. As I said, he's the Director General of AAPA here based in Kuala Lumpur. He talks about the outlook for the regional players. We're back in just a minute. Welcome back to Asian Aviation Magazine. I'm Matt Driscoll in Singapore. As we said at the top of the show, we have a really nice interview with Mr. Andrew Herdman, the Director General of the Association of Asia Pacific Airlines. We caught up with Mr. Herdman last week on Skype, and we talked about how hard it is for Asian airlines to deliver profits to shareholders, even though their revenue numbers are looking really good. We talked about how cargo is flatlining and what some of the risks are in 2016, among several other topics. If you hear some typing in the background, that's just me taking notes. We got to figure out our Skype microphones here and get that worked out. But first up, you'll hear Andrew Herdman talking about why Asian airlines are earning lots of revenues, but why they're finding it hard to turn those revenues into net profits.
Yeah, well, those figures tell a story that there's a lot of revenue in the airline business, but profits are harder to come by. And although the profits for the industry have been picking up in the last several years, that's been led by the U.S. carriers, which is now widely appreciated, but it was a big change from the previous decade. Whereas the faster growth continues in Asia, but it doesn't translate into profitability. Now, that's a generalization. If we look around, the Japanese have been very profitable, All Nippon, Japan Airlines, some of the Chinese carriers. So it's a mixed picture, and it's another illustration of the fact that traffic volumes keep on growing, but it's a very competitive market, or a set of very competitive markets. So the big challenge is how do you keep investing for the future, but how do you deliver profits to shareholders?
Next, Mr. Herdman talks not just about the challenges in Asia and about turning those revenues into profits, but how the Asian airline market differs from that in the United States, where profits for some airlines are plentiful in some cases, and the differences with the European Union.
No, cargo is a big part of the business for Asian airlines, and Asian airlines carry almost 40% of total air cargo traffic globally. So the downturn or the slowdown in global trade and the weak market conditions for air cargo doesn't help for those Asian airlines that are strongly committed to the cargo business. So that's a drag on performance. On the passenger business, there's plenty of volume, but the markets are intensely competitive. So the lower fuel prices have certainly helped bring down the fuel bill, and that's the single biggest cost for most airlines. But most of that's been passed on to customers in the form of lower fares. Now that, of course, keeps demand growing, but it also means there's no easy solution to the conundrum for airline CEOs, which is how do you deliver profitability at sustainable levels. The contrast with the U.S., where the market's big and very mature, with very low growth rates, and you see strict capacity discipline, particularly now that the industry's consolidated into four major players, dominating 75-80% of capacity. So the situation there is they don't have a lot of growth, but they do have record load factors, and prices tend to be stable. They've edged downwards as fuel prices have come down, but profitability has been very strong. So that's reflected in the valuations you see for the big U.S. carriers. If we look at Europe, it's a mixed picture. IAG is doing well. Lufthansa and Air France still have work to do on restructuring. You've got the two leading LCCs, Ryanair and EasyJet, who are extremely profitable and doing well. But when we come to Asia, it's not so simple. That even amongst the low-cost carriers, we see a very mixed results. Cebu Pacific's been profitable. Indigo in India has been very successful. But AirAsia, which is by some measures one of the largest LCCs in the region, have had a rather patchy performance. Several of the operations have been loss-making. Particularly that long-haul operation, AirAsia X, has been struggling. So it's not a question of choosing the right business model and being rewarded no matter what business model you're following, you've got to find a competitive edge, whether it's full service, premium traffic, long haul, short haul, and for the low cost carriers, the challenges are still there. That having low costs, you've also still got to generate revenue that covers those costs if you're going to be profitable.
And Mr. Herdman and I also talked about some of the challenges that Asia faces in terms of airport infrastructure.
The biggest bottlenecks in terms of airport infrastructure in places like India, chronically, although in recent years they have been investing in some world-class infrastructure at the major airports. And then Southeast Asian markets like Indonesia, Vietnam, Philippines, where the growth has been sustained at levels above what was expected. And so the demand for infrastructure has grown ahead of what's being built and causing congestion and other problems.
Herdman then goes in to talk about those same infrastructure challenges in Indonesia, for example, and why it needs more hardware, while China, on the other hand, faces sort of a software challenge, and why it needs to change the way it manages its airspace.
The Indonesian market is much bigger than people realize, both domestically and in terms of potential to grow within the region. So it's an interesting story, and it's one of those markets where they do need to invest more in airport infrastructure. Jakarta is stretched, needs additional capacity. The government is pushing ahead with projects, but the question is, will they catch up with what's needed in terms of future growth, not just in Jakarta, but there are other key airports around the country. We didn't talk about air traffic control. In China, they've built a lot of world-class airports. The main congestion in China is airspace related, and that's an issue in some other points around the region that air traffic management, airspace management, coordination between the different national authorities on air traffic control is another important challenge to meet future growth.
And finally, Herdman gives us a roundup of the global picture for aviation. And once again, apologies for the typing in the background that you hear, but I had to take good notes just in case the recording didn't work. But we'll work on that in future episodes of this podcast. Again, here's Andrew Herdman on the future of Asian aviation for Asian Aviation Magazine.
Well, we try to be a commentator on the overall situation and challenges facing the industry. So right now it looks like the passenger demand will keep on growing, particularly at low oil prices. Airfares are so affordable. That's definitely a spur to faster than average growth across the industry. And Asia, by several measures, is already the world's largest aviation market. And we expect that to continue in terms of the size of the market. And all the forecasts from Boeing, Airbus, and IATA and others tend to confirm that. The question is, can you translate that growth into sustainable levels of profitability? And if you want to look for risk factors, you've got weak currencies against the US dollar. You've got slowing growth in Asia, although it's a deceleration. You've still got significant growth in the economies. Even China is growing at probably 6 to 7, and many of the other Asian economies are growing at 4 or 5%, but they are slowing down a little. And with the weaker currencies, that also may affect consumer confidence. There's no sign of that at the moment. So the outlook seems reasonably positive for the passenger side of the business, albeit there are some factors to watch. The cargo side is very weak. We had a terrible downturn in the 2008 financial crisis. Global trade suffered a heart attack, and air cargo reflected that. Then we had a huge rebound in 2010, and then we had stagnation through about the following 3 years. It bottomed out, and then we had some growth in 2014. That continued into 2015, but then stalled. And right now the cargo business has got pretty much flat compared to a year ago. The other thing affecting the cargo business, because the market hasn't grown over the last 6-7 years the way it was expected to, there was a lot of surplus freighter capacity, and the belly capacity in the passenger aircraft keeps on growing in line with the passenger market. And so you have got some structural imbalances in the cargo sector, particularly oversupply of freighters. And that affects the ability to maintain yields. And even when business picks up, there's still a lot of latent overcapacity. So that hangs over the cargo sector. But as I say, on the passenger side, the demand outlook, it looks pretty positive. In terms of fuel prices, $50 seemed cheap, but if you hedged at 80, you had to honor those contracts. And obviously now with its price at 30, the question is what's the right hedging strategy? A lot of airlines have simply given up and said we'll go with the spot market. But low oil prices are definitely a boost to aviation because obviously they reduce costs, but that gets translated into more affordable airfares, and that's underpinning the growth. If oil prices were to snap back to higher levels, then that could have a significant impact, even if it was a signal that the global economy was on an upturn. It would dampen demand for travel, so we wouldn't see quite the strength of travel demand growth that we are seeing.
And that's it for this week on the Asian Aviation Weekly podcast. Stay tuned to Asian Aviation Magazine, where we'll be bringing you the latest news from the region. Coming up soon, as I said, is the Singapore Air Show, where we're sure lots of news will be made. Make sure you like us on Facebook. Do a search for us. Check us out. Check out our Twitter feed, which is at Asian Aviation. That's all one word. And, of course, check back frequently on the website for the latest updates. That address is www.asianaviation.com. For Asian Aviation Magazine, I'm Matt Driscoll reporting from Singapore.